and welcome to Equity Guru's latest Long and Short. Today's big news is Apple. And it turns out that Apple's killing it in everything except the iPhone. Let's have a look at what the Apple chart has done over year to date. To about mid-May, the stock rose up to about 34%. From May to June, however, the stock dropped about 18%, and then from June towards July end, the stock has been up over 25%. The reason for this can be attributed to several things. From Jan to May, the increase in stock price could be attributed to the bull market run that the US economy is having, but on the other hand, it can also be attributed to Apple's ever-increasing sales in the iPad, the services, and its subscription services. From May to June, the major reason Apple stocks declined was because for the first time in several years, Apple failed to meet expectations and expected revenue growth in China. It's simply the case that Apple's iPhones are no longer as popular as they were once before. From June towards July end, Apple's sales and Apple stock improved significantly, improving about 25% in its price. And today, after market, the stock is up about $8, closing in at $217. The key question here is, what does Apple's road ahead looking like? Well, Apple made some major announcements in the beginning of the year when they said that they would be pivoting to a services and a subscription-based model, offering services such as the Arcade Plus, the gaming service, the TV Plus, which is Apple's version of Netflix, where they would offer their own in-house content, as well as News Plus, which is editorially created and curated news on Apple platforms. Now, Apple also made a major announcement when it said that it would be entering the fintech space. In partnership with Goldman Sachs, Apple announced the Apple Card, a no-fee credit card that apparently is going to be all metal and free for Apple users if they would like to sign up for it. There are no hidden fees, it's apparently transparent and offers great rewards. What does the road ahead look like though? When it comes to the revenues, Apple's Q4 revenues have been significantly higher that have been fueled by several things. The first, September starts off with a major Apple event where Apple announces their new lineup of iPhone products, a new lineup of the OS systems, whether it be for the Mac, the iPad, or the watchOS, and finally, the Apple Card that is expected to launch towards the end of August. However, Apple has also suggested that the streaming services will finally be launched towards the market when it comes to gaming and videos towards fall of 2019. We think that these expected new product launches will add to significant revenue bumps for the company. So, what's going to happen to the iPhone? Even in this quarter, Tim Cook in the earnings call mentioned that iPhone sales have declined in Greater China, but in fact have remained the same and even significantly improved when it comes to mainland China. The key question here of consideration is that Apple's iPhone, its cash cow, its revenue maker, and its money maker, is not as popular as it was before. Several reasons follow. One, the Android marketplace is evolving at a very rapid pace, and with firms such as Google launching their flagship Google Pixel 3a, which is the cheaper version of the Pixel, is available to a much larger audience and a much larger user base. The affordability is a huge factor when it comes to Apple products because all of its products are priced at an extreme premium that does not make it exactly affordable for the average user. But the ecosystem is very real, and if you're hooked onto it, chances are you're likely to remain within it. Transitioning out of the ecosystem is a problem in and of itself, and something we'll talk about in another episode. Coming ahead, Apple's launch of the credit card, entering the fintech space, and launching a diversified product lineup of iPhones, the new watch, and the Apple Card along with the streaming services can be expected to increase revenue towards the end of the year. Will this pivot to subscription or services-based industries allow Apple to remain profitable and be the giant that allowed it to hit $1 trillion market cap a couple of months ago? Well, this is a question that requires a little bit of nuance. Apple has been great at whatever it has done in the past, and having $300 billion in the bank account means that it can spend large amounts of capital developing its own content, hiring editors for its news show, and developing the kind of content or the kind of games that users would want to engage in. But it also means that Apple is now fiercely competing in an already crowded marketplace. By launching Apple TV Plus, sure, Apple might gain some subscribers, Apple might even have the best content there is out there. But the key question here is, how many users out there will be willing to pay for an additional streaming service outside of Netflix, outside of Disney, and outside of Amazon? From being one of its kind and being an industry maker, not just an industry leader, Apple has become a conglomerate that is fiercely competing with firms that are at least as big as it itself is. Whether it be Netflix, Disney, or Amazon, Apple's competitive landscape is significantly becoming fiercer and fiercer, whether it be the Mac, the iPhone, or the services-based businesses. Whether or not you should buy Apple stock is something that would constitute investment advice that I wouldn't be willing to give to you. Till then, we hope that the Apple rally hopefully continues and its pivot to the subscription or the services-based industry is good enough to keep the firm profitable. Thank you and see you tomorrow.